Right now, Bitcoin is at $81,322, and you are being set up. The headlines tell you rate jitters are capping the price. The crowd sees a strong buy signal and thinks it's a one-way ticket. But the funding rate, the S&P 500 correlation, and this 82,343 level are painting a completely different picture. There is one danger zone and one hidden opportunity today. I'll show you both. Stay until the end. I'm giving out 3 exact entry and exit levels you can use now, with stops and targets to the dollar. This is not an analysis. This is your trade plan. Before we even look at a chart, here is the instant market verdict. Session bias, trending, continuation of the strong buy structure we see on the daily and the 5-hour. The trend is undeniably up, but we are coiling right below a major resistance cluster. So the market is trending but also at an inflection point where traps happen. The one invalidation level that proves this bias wrong is 78,273. Write this number down. If we break 78,273 today, the whole structure shifts from strong buy to a deep correction, possibly even a trend reversal. I want you to comment that number right now. Type 78,273 in the comments as a reminder to yourself and as a sign you're watching this with the discipline of a trader, not a gambler. I read every comment during the first hour. Let's go to the charts. We build our trade plan from the top timeframes down to the 60-minute, because that's how institutional money flows. On the weekly chart, Bitcoin is holding a massive cup and handle continuation that started from the 2022 lows. The 20-week moving average is sloping up sharply and sits around 72,400. The 60-week is at 61,800, and the 200-week, the ultimate pension fund and sovereign anchor, is at 38,200. We are miles above all of them. This is why any bearish call is counter-trend and only for short-term scalps. On the weekly, the MACD is on a steady buy signal, no divergence, and the histogram is expanding. This is not a market that wants to roll over. It wants to digest and push higher. Drop to the daily chart, which the algorithm reads as strong buy. Price has been consolidating for 6 days in a tight band between 78,200 and 81,800 before today's push to 81,322. The 20-day moving average has curled up aggressively and is now at 79,400. The 60-day is at 75,800 and has just crossed above the 200-day, a golden cross that attracted algo buying through the weekend. The 200-day is at 68,200 and climbing. When I say Bitcoin is in a strong buy, I mean it is trading above every single major moving average on the daily, and those averages are all pointing north. This is a textbook bullish alignment. However, the daily MACD, while positive, has flattened its histogram over the last 3 sessions. That tells you the momentum is intact, but the immediate explosive energy is taking a breath. It's not a sell signal, but it's a warning that a sideways or slightly lower period is possible before the next leg. Now, the 4-hour chart gives us the tactical edge. The 20 exponential moving average on the 4H is at 80,200, and price bounced cleanly off at 6 hours ago, which is why we have that strong buy on the 5-hour. The 60 EMA on the 4H is at 78,800, just above our first support level of 78,273, creating a double floor. This convergence of MA and horizontal support makes 78,800 to 78,273 a kill zone for buyers. If price revisits that area, it's a high probability buy the dip zone. On the 4H MACD, we have a subtle but critical detail. The MACD line is still above the signal line, but the histogram has made a lower high while price made a higher high. That is a hidden negative divergence. Most traders miss this because they only look at the classic divergence. A hidden divergence in a strong trend can signal a temporary pullback or consolidation, not a reversal. So this divergence is why we must respect the 82,343 resistance and not chase blindly. It's the engine that could fuel a trap. Now, resistance levels. The daily resistance we are watching is 82,343. That's the origin of a sharp sell-off we had 3 weeks ago. and it also aligns with the 127.2% Fibonacci extension of the last minor pullback. Above that, the next resistance is 83,376, which is the all-time high from March, and a break of that opens the floodgates toward 85,000 and beyond. Support below us is 78,273, the local swing low from last week, and then 77,238, which is the top of the prior consolidation range. Old resistance becomes new support. These numbers are your map. 82,343 is the line in the sand. Below it, we are in a bullish but range-bound dynamic. Above it, we enter price discovery. Now, here is what most traders miss: the cross-asset linkage. Bitcoin is not moving in a vacuum today. Rate jitters are growing because the market is repricing the Fed's path after stronger ISM services data. The S&P 500 is pinned just above 5,200, struggling to hold its 50-day moving average. Bitcoin's rolling 30-day correlation with the S&P has dropped to 0.41 from 0.72 weeks ago, which means Bitcoin is trying to decouple. But if the S&P takes a leg down on rate fears, Bitcoin will feel the shock. The funding rate on major perps, Binance, Bybit, OKX, has flipped positive to 0.025% on average. That means the crowd is net long and paying a premium to stay long. This is a textbook setup for a long squeeze if we fail at 82,343. A flush below 80,000 would liquidate late longs and give the smart money a clean re-entry. So while the trend is strong buy, the immediate path may have a trap built into it. The opportunity is that any such flush will likely be a springboard. Gold, by contrast, is screaming higher on geopolitical risk, breaking new all-time highs. That tells you real fear is in the system. Bitcoin is acting more like a risk asset than digital gold right now, but the Clarity Act hearing today could be the catalyst that changes that narrative. The Clarity Act aims to provide a clear regulatory framework for digital assets, and any positive tone could trigger a decoupling spike, sending Bitcoin through 82,343 irrespective of equities. That's the fundamental wildcard. Institutional ETF flows have been neutral to slightly positive this week, with no major outflows, so the smart money is not reducing exposure. That gives the dips a safety net. Here is my 1 to 2 week directional lean. I am bullish, but I need confirmation above 82,343. If we close a 4H candle above that level, the target becomes 83,376 first, then 85,000. The thesis is invalidated if Bitcoin loses 78,273 on a daily closing basis. Below that, the golden cross narrative takes a hit, and we could revisit the 74,000 zone. So 78,273 is the line that says this bull trend is pausing hard. Most people will skip this next part, but this is where money is made. Keep watching. I'm giving you 3 trade strategies with exact trigger prices, exact stop losses, and exact targets. These are not vague zones, they are executable levels. Strategy 1, the sniper. This is for the conservative trader who wants a high probability breakout entry and is willing to miss some moves to avoid the chop. The trigger condition is this: a 4-hour candle close above 82,350. We use 82,350 to account for wick noise, just above the 82,343 resistance. Wait for the candle to print and close. Do not enter intrabar. Once that close occurs, you enter long on the next open. Stop loss goes at 81,450. The logic: 81,450 is just below today's volume weighted average price and below the intraday support that formed before the surge. It gives enough breathing room below the breakout point and the 81,000 round number. Risk on this trade is $900 per Bitcoin from entry at 82,350 to stop at 81,450. Target 1 is 83,376, which is the all-time high. That gives a reward of $1,026, a risk-reward ratio of 1 to 1.14. Target 2 is 84,200, the 161.8% Fibonacci extension of the last swing, with a reward of $1,850, a risk reward of 1 to 2.05. What voids the setup? If price breaks above 82,350 but then immediately reverses and closes a 4H candle back below 81,800, that is a failed breakout. In that case, exit the position immediately and wait for a retest of the 78,273 support zone. This is the cleanest, highest conviction setup, but it requires patience. Strategy 2, the active trader. This is the standard approach for those who want to ride the trend without waiting for the breakout confirmation. The entry condition is a pullback to the 80,800 to 80,600 demand zone. That zone represents the 4-hour 20 EMA and the top of the micro consolidation that preceded today's rally. Look for a bullish engulfing candle on the 15-minute chart or a sharp bounce with volume to confirm the dip is bought. Stop loss is placed at 79,800. Why? Below 79,800, you lose the 80,000 psychological level and the 4-hour 60 EMA, so the pullback would be deeper and your premise is invalid. Risk on this trade. If you enter at 80,800 and stop at 79,800, that's $1,000 per Bitcoin. Target 1 is 82,343, our major resistance, giving a $1,543 profit and a risk reward of 1 to 1.54. Target 2 is 83,376, with a profit of $2,576 and a risk reward of 1 to 2.57. When target 1 is hit, move your stop to break even. Once price clears 82,343, trail the stop by $500 below the next support, locking in gains. This setup captures the dip buying momentum that the strong buy environment provides, while respecting the resistance above. Let's see how aligned we are. Type your Bitcoin range for tomorrow in the comments right now. I'm talking high and low. Is it 80,200 to 83,400? Do you see a breakout or a trap? I'm reading them, and I'll reply to the most thought-out ones after the market close. This interaction keeps us all sharp. Strategy 3, the aggressor. This is high-risk, counter-trend, and only for those who know how to lose small and manage risk aggressively. The idea is to play the potential long squeeze and resistance rejection. Entry is a sell limit in the 82,200 to 82,343 zone, with the condition that the 15-minute chart prints a bearish engulfing or a shooting star candle near that resistance. Do not blindly sell the number. Wait for the rejection evidence. Stop loss is tight at 82,800. Above 82,800, the breakout is likely real and you want no part of this short. That's a $600 stop from the top of the entry range. Target 1 is 80,600, the same demand zone from strategy 2. That's a $1,600 gain from 82,200, giving a risk reward of 1 to 2.66. Target 2, if momentum crashes through, is 79,500, near the 20-day moving average. Explicit warning. This is a bet that the 82,343 ceiling holds and that leveraged longs get punished. If the Clarity Act news hits positive, this setup evaporates instantly. Use a fraction of your standard size. Only aggressors apply. Before we close, here's the risk management pulse. Never risk more than 1 to 2% of your account per trade. No positions through high-impact news like the Clarity Act hearing unless you are sized for it. Stops are non-negotiable. If a level is hit, you're out. No hoping, no moving stops away. Now, let's lock in the one number that matters for the next session. It's 82,343. Above that, the trend accelerates and the trap is a launch pad. Below that, we are still in a bullish chop, and the 78,273 support is the next destination for value buyers. Tomorrow, the Clarity Act hearing outcome drops, and that could be the volatility event that shatters this range. I'll be live with the breakdown the moment the news hits, so hit that bell. If you want the full breakdown on gold and how its inflation geopolitics pulse is shaping up against Bitcoin, that video is live now. Click the end screen and see why gold's breakout is the mirror you need for this Bitcoin setup. Smash like if this analysis gave you a clear plan. Subscribe and hit the bell for daily coverage of all 8 key assets. Remember, the market rewards the prepared. I'll see you in the next one.